Trading with $1,000. It sounds small, even insignificant. Is it realistic? Can you turn that modest stake into the first step of a winning journey in one of the toughest markets on earth? If all you see on the chart is a tiny number, you'll panic. But look at the legends: Jesse Livermore, Richard Dennis, Paul Tudor Jones, Stanley Druckenmiller, Ed Seykota. They all started exactly where you are now, with limited capital, staring at a massive market filled with risk and opportunity. And from those humble beginnings, they built enormous fortunes and became immortal names in trading history. The difference was never the size of their initial capital. They weren't luckier than you. They didn't possess a secret formula you don't have access to. The real edge was psychology and mindset. A new trader with $1,000 can blow up simply because of fear, greed, or lack of discipline. A great trader with the same small stake can transform challenge into opportunity and convert fear into strength. When your psychology is solid, every single dollar becomes a real-time lesson. Every small trade becomes a building block for future, much larger profits. Look at Jesse Livermore, known as the Great Bear of Wall Street. When he was young, he had only a few $100s and big dreams. His challenge wasn't the small capital, it was his emotions and psychology. Livermore studied the market, learned to read crowd behavior, felt the flow of money, and most importantly, learned to control himself when the market moved against him. Every small trade taught him patience and respect for the market. Those lessons, not his capital, later helped him become a legend. Richard Dennis, the iconic turtle trader, also started small. With only a few $1,000s, he built a trend-following strategy and even turned his students into highly successful traders. His edge was not luck or big numbers. It was discipline and systemization. Dennis taught that risk management is non-negotiable. With $1,000, risking 1 to 2% per trade becomes the shield that keeps you alive. Dennis understood that traders fail not because the market is difficult, but because they fail to control themselves, break their rules, and let emotions run the show. Paul Tudor Jones, one of the most famous traders of the 1980s, also began with modest capital. He emphasized that protecting capital is more important than chasing fast profits. Jones spent countless hours observing the market, studying crowd psychology, and preparing himself to handle losses. With $1,000, every mistake becomes a valuable lesson. Instead of panicking, learning to accept losses, extract insights, and prepare for the next opportunity is exactly what allowed legends to turn adversity into leverage. Stanley Druckenmiller, longtime partner of George Soros, also began with small capital, but his approach centered on capital preservation and flexible thinking. Druckenmiller understood that profits come from a disciplined and adaptive mindset. With $1,000, every trade teaches patience: when to hold, when to step aside, and when the market simply isn't offering a quality opportunity. He believed that survival and psychological control matter far more than any profit figure. Ed Seykota, a pioneer of computerized trading systems, also started small. He treated his tiny account as a laboratory for building emotional resilience. Every trade was a chance to learn. Every loss was a signal to improve. Seykota famously said, "The market reflects your emotions. If you're tense, fearful, or greedy, the market will repay you with losses." With $1,000, this lesson becomes painfully obvious. Mastering emotions, maintaining discipline, and learning from each trade are the foundation of the massive profits that come later. The takeaway from all these legends is simple. A small start is not a limitation. Psychology is what determines everything. When you trade with $1,000, the pressure hits you more directly than ever. One impulsive position, one moment of greed, or 1 second of panic can be punished instantly. But if you control your emotions, handle pressure, and stay disciplined, you transform those small dollars into a durable foundation for a long-term trading career. Think of $1,000 as your first mentor. It teaches patience. It teaches you how to cut losses. It teaches you not to chase quick wins. Every small failure is a priceless lesson. Every great trader, from Livermore to Seykota, went through the same fears. But they turned psychology into strength, challenge into opportunity, and small capital into the foundations of legendary success. With $1,000, you learn to observe the market without being blinded by capital size. You learn to recognize real opportunities. You develop strategic thinking. This is the moment every trader must face. Standing in front of the market, feeling pressure and fear, yet remaining calm. Once you master this, capital size no longer matters. You've learned the most important rule in trading. Survival depends more on psychology than on the amount in your account. Compounding and capital growth. You can make a small profit from a $1,000 account, but making a small profit once is nothing special. The real challenge is turning that profit into long-term growth. That's the power of compounding. When every dollar generates more dollars, not by luck, but through discipline, patience, and strategy. With a modest account, you learn to view every trade as a link in a long chain, not an isolated event. A small win today isn't something to celebrate, it's fuel for a long-term profit cycle. When you apply compounding, $1,000 can become $2,000, then $4,000, then $8,000. And each step upward isn't about luck. It's a lesson in discipline and psychology. Every great trader who started small understood this. They didn't chase big profits on day one. They allowed returns to accumulate over time, controlled risk, cut losses quickly, and reinvested intelligently. That's why Richard Dennis and the Turtle Traders were able to turn just a few $1,000s into hundreds of thousands, even millions, in a relatively short period. They leveraged compounding with absolute discipline. With $1,000, you learn how to reinvest profits strategically. A $20 winning trade isn't meant to be withdrawn or spent. It's capital for your next setup, a resource to refine your strategy without damaging your principal. Every reinvested dollar is a building block for your account, gradually increasing your capital while strengthening your mindset and discipline. The power of compounding doesn't come from speed. It comes from consistency and patience. You can't turn $1,000 into $100,000 in a week without taking catastrophic risks. Real traders know that a steady sequence of small, consistent wins is far more powerful than one lucky home run. Compounding is a probability game, but probability only works when you respect your rules, manage your emotions, and stay patient. Psychology becomes the biggest challenge as your account grows. With $1,000, you feel pressure, but you can stay patient. When the account reaches $5,000 or $10,000, greed and fear hit harder. This is where many traders fail. They abandon discipline, ignore risk parameters, and chase oversized returns. Success isn't about how much you make, it's about maintaining your strategy and mindset as your capital scales. Compounding also teaches long-term vision and patience. A small win today isn't an event, it's a piece of the bigger picture. You learn to plan week by week, month by month. You understand that a steady series of trades, compounded over time, creates extraordinary results. This is the mindset most traders never develop. They obsess over short-term numbers, panic over small losses, and completely miss the power of long-term accumulation. A practical strategy for growing a $1,000 account must combine risk management, high-quality setups, and profit reinvestment. For example, risk 1 to 2% per trade with absolute respect for your stop loss. Only take high-probability setups, avoid emotional trades. Reinvest profits instead of withdrawing them. Track performance, journal your trades, and refine your strategy continuously. This creates a compounding cycle. Every small trade is a lesson. Every small profit is leverage. With $1,000, you learn to turn every cent into strategy, every small win into momentum, and every small loss into data for improvement. A real example, you average 2% per week on a $1,000 account. After 10 weeks, you don't just have isolated profits, you have compounded growth, taking your account past $1,200. After a few months of consistency, the number accelerates as compounding kicks in. Legendary traders use this principle. They didn't chase fast returns. They let profits accumulate and optimized every step along the way. Learning to use compounding also teaches you to control greed. When your account starts growing, it's tempting to size up too aggressively or ignore risk. A skilled trader knows that protecting capital and maintaining consistent returns is more important than a fast profit spike. With $1,000, you get the perfect environment to practice this, to build discipline and long-term vision, something large capital cannot teach without a solid foundation. Ultimately, growing a $1,000 account isn't just about making money. It's about developing a trader's mindset. Every trade, every win, every loss is data that helps you optimize your strategy, sharpen your psychology, and learn how to survive the market. When you understand the power of compounding, you realize that $1,000 isn't a limitation. It's a tool to build your foundation, train your discipline, and prepare for larger capital in the future. With the right strategy, iron discipline, and a strong mindset, $1,000 is no longer a small number. It becomes a laboratory, a launch pad, and a foundation for turning small trades into long-term, sustainable success. This is how the legends built their careers. Start small, compound consistently, and let the power of time transform every small dollar into something extraordinary. A $1 trading method that actually works. Trading a ones and dollar account is not a playground for luck, nor is it a game for the undisciplined. With this level of capital, every trade carries weight, and every mistake reflects your psychology in real time. That's why method and discipline must come first. This isn't theory. These are survival rules you must follow if you want to turn a small account into a launch pad for future gains. Risk management, the non-negotiable rule. With a $1,000 account, one rule must be etched into your mind. Never risk more than 1 to 2% of your capital per trade. You've probably heard this many times, but you only understand its power when you look at the actual numbers. A $50 risk may hurt when you lose, but it won't destroy your account. Ignore this rule, and one oversized position or one moment of greed can wipe out your capital within a few price swings. Risk management doesn't limit profits, it protects you from early extinction. Beginners often believe trading big equals getting rich fast. In reality, a small account forces you to calculate precisely, accept rational risk, and keep your composure. When you stick to the 1 to 2% rule, you learn how to handle pressure, cut losses quickly, and wait for the next opportunity, the same skills every legend had to master. Setups. Identifying real opportunities. With limited capital, your margin for error is tight. That's why you must learn to hunt only for high-quality setups. Not every trade deserves your money. A good setup is a combination of technical structure, price behavior, and market context. It might be a breakout from a major support resistance zone or a clean pullback in a well-defined trend. The key is entering only when the opportunity is confirmed, not when FOMO kicks in. Richard Dennis taught that trading is a probability game. You won't win every trade, but you can win over time if you choose your spots wisely. With $1,000, you learn patience, waiting for setups where the odds lean in your favor. Every trade becomes a lesson in discipline, a reminder that the market does not bend to your wishes. Stop loss, accepting losses like a professional. A stop loss is not your enemy. With a small account, it's your life insurance. A stop loss protects your capital, lets you take the market's lessons without blowing up your account, and keeps you mentally clear. A solid trade paired with a disciplined stop loss allows you to focus on analysis instead of anxiety. With $1,000, a reasonable stop may be 1–2% of your account or levels based on support resistance or ATR. The secret is absolute compliance. Many traders fail not because the market is harsh, but because they ignore their stops, hoping price will turn around. With a small account, hope kills faster than any market reversal. Take profit, knowing when to step away. Just like a stop loss, a take profit is not a restriction. It's a discipline tool. It turns probability into actual profit. A solid take profit plan built on a risk-reward ratio ensures your winners outweigh your losers. With a $1,000 account, you're not trying to squeeze oversized gains. You're building consistency. Paul Tudor Jones once said, "You don't have to be right all the time. You just have to survive and execute when the odds are in your favor." Take profit helps you live that philosophy. Small, consistent wins matter more than chasing oversized trades that rarely work out. Pack practical strategies for a small account with $1,000. You need simple strategies that control risk and maximize probability. Examples: 1. Clean breakouts. Identify major support resistance levels. Enter only when price breaks with volume confirmation. Stop loss below old support or above old resistance. Take profit at 1–2 or 1–3 risk reward. 2. Trend pullbacks. Trade only in clear trends. Wait for a clean pullback and a confirmation candle. Stop loss near the recent swing. Take profit following trend continuation. 3. Steady scalping. Multiple small trades with controlled 1 to 2% risk. Take small, consistent profits. Accumulate gains slowly and safely. The key, maximize probability, avoid over-leveraging, and track every trade. Journaling helps you refine setups, identify what works, and eliminate what doesn't. With a small account, this is the fastest way to accelerate your learning without blowing up. Psychology, the real engine behind the method. A method only works if your psychology stays stable. With $1,000, you learn how to handle pressure, avoid emotional trades, stay calm during losses, and stay humble during wins. You learn to see the market like a strategist, analyzing and executing with discipline instead of reacting impulsively. Each trade teaches you: wait for high-quality setups, never force entries. Respect your stop loss and take profit without exception. Manage capital tightly, small risk, controlled decisions. Journal, review, refine. Turn losses into data, not emotional damage. Master the method, and $1,000 becomes unlimited potential. Once you master this method, $1,000 is no longer a limitation. It becomes a laboratory where you build skill, discipline, and emotional strength. It becomes a launchpad for turning small, structured trades into a long-term foundation for future profits. This is exactly how Trading Legends started. Small capital, tight discipline, controlled psychology, and steady accumulation. Start small. Trade smart. Let discipline turn every trade into momentum for the next one. Testing and optimizing your strategy. You can study theory, read books, and listen to legends share their stories, but the real truth lives in the market. A strategy that looks flawless on paper can collapse instantly if it isn't tested and optimized properly. When you're trading with $1,000, testing and optimization aren't optional. They're survival. PASH, backtesting. Learn from the past, stop guessing. Every trading legend started by studying the past. Backtesting isn't a game of luck. It's your laboratory for understanding market structure, win probabilities, and real risk exposure. It's where you apply your setup, evaluate stop losses and take profits, and stress test your risk management using historical data. When you backtest, you're not just evaluating a strategy, you're evaluating your psychology. You'll see small losses, small wins, and you'll have to ask yourself, do I have the patience to accept these results in live trading? This matters because with a $1,000 account, your tolerance for discomfort determines whether you survive or get wiped out early. Backtesting helps you identify which setups fit market volatility, quantify real risk per trade, validate risk-reward ratios based on data, not imagination. Spot weaknesses in your strategy before risking real money. Forward testing. The real market is the ultimate judge. After backtesting comes forward testing, verifying your strategy in real-time conditions. You place small live trades, follow your validated setup, record the results, and compare them to your historical data. This is where your emotions get tested for real. You'll feel the sting of losing real money, the excitement of a trade moving in your favor, and the temptation to grab profits too early. Forward testing helps you understand how your emotions respond to real capital. Identify which setups work in live conditions, not just theory. Fine-tune stop losses and take profits based on real volatility. Build disciplined risk management using a small account. A smart trader understands forward testing is psychological training, not a shortcut to fast profits. With $1,000, every forward test is a real lesson in patience, discipline, and strategic refinement. Refining your setup. Turning theory into real-world consistency. Backtesting and forward testing reveal what works and what needs to go. This is where you optimize. Adjust stop losses to avoid getting wicked out. Refine take profits to maintain a healthy risk-reward. Adapt position size to account volatility and current capital. Eliminate low-probability setups. Optimization isn't about finding a perfect formula. The market will never give you one. It's a continuous cycle. Every week, every month, you analyze data, learn from mistakes, and refine your strategy. This is how trading legends evolve: constant optimization, adapting to market conditions, and building mental resilience. Real-world strategy, consistency over flashiness. With a $1,000 account, strategy isn't theory. Every trade becomes an opportunity to improve. Follow only the setups you've optimized. Respect your stop losses and take profits. Log every trade, wins and losses. Analyze the data and remove inefficient setups. This creates a compounding learning cycle. Every trade equals data. Every loss equals a lesson. Every win equals information for scaling up. When you stay consistent, every small dollar becomes a building block for growth. Each trade turns into a skill-building moment on your path to becoming a real trader. The psychology of testing and optimization. Testing and optimization put your psychology under the harshest pressure. You'll be frustrated when a setup fails. You'll feel lost when forward testing delivers losses. You'll be tempted to jump from one strategy to another. This is where a small account becomes your greatest teacher. It forces patience, discipline, and long-term thinking, traits more valuable than any indicator or formula. Great traders know the market doesn't reward impatience. Forward testing and optimization only work when you follow the rules strictly, log every detail, analyze data objectively, improve consistently. Most traders skip this phase, and that's why 95% fail. With a $1,000 account, you get to train your psychology early, turning testing into the foundation of a long-term strategy. Conclusion. Strategy testing and optimization are essential for small accounts. Backtesting teaches you from the past. Forward testing validates your approach in real time. And refining your setup ensures continuous improvement. All of this serves one mission: protect capital, build psychological strength, and maximize your probability of long-term success. With $1,000, you're not chasing big profits. You're building a durable system. You must stay patient, stay disciplined, and learn through data and real experience. This is how Trading Legends did it, one test at a time, one refinement at a time. One small loss turned into one valuable lesson. When you master this process, $1,000 stops being a limitation. It becomes your laboratory, your training ground for skill building, strategy development, and psychological mastery. It's the foundation for bigger capital, higher confidence, and long-term consistency. This is how you turn a small account into a launch pad and how you transform yourself into a serious trader. Patience and long-term mindset. Trading a $1,000 account is a lesson in patience and long-term thinking. You're not standing in front of a shortcut to fast money. The market doesn't reward luck or impulsive decisions. It rewards those who are disciplined, patient, strategic, those who know how to turn every small dollar into the foundation of a long-term journey. When you trade, the goal isn't the money itself. A $1,000 account isn't meant to explode overnight. It's a tool to build your mindset and your skill set. Every win or loss is a lesson. Every setback is a chance to learn how to cut losses properly, ride profits effectively, and stay emotionally grounded. Every legendary trader went through this phase. They learned to master themselves long before they mastered the market. The foundation of every success. Patience isn't just waiting for the right setup, it's sticking to discipline no matter what the market does. You must accept that not every trade will be a winner. A stop loss isn't the enemy, it's life insurance for your account. Riding profits isn't greed, it's a strategy to maximize high probability opportunities. When you follow this discipline, you act like a real trader, unmoved by emotions, unfazed by losses, and not overly excited by wins. Discipline also means recognizing when a trade isn't worth taking. The market won't always give you what you want. Knowing how to skip bad trades, avoid over-leveraging, and focus on high-probability setups is a sign of a smart trader. With a $1,000 account, every such decision is a lesson in capital preservation, risk management, and psychological control. Cutting losses. The mark of a professional trader. One of the biggest differences between beginners and elite traders is how they handle failure. Beginners see cutting losses as personal defeat. Professionals see it as a strategic move, a way to protect capital and stay alive for the next opportunity. With a $1,000 account, every stop loss teaches you emotional control, disciplined risk acceptance, and the ability to survive the market. Letting profits run, maximizing high probability trades. On the other hand, when a trade moves in your favor, you must know how to hold profits intelligently. Not too greedy, but not too timid either. This is where patience pays off. You learn to read price behavior, understand market structure, and recognize when to lock in gains. Letting profits run isn't gambling. It's a skill built on discipline and experience, the skill that turns small capital into long-term growth. A long-term mindset, turning $1,000 into a foundation. The goal isn't to turn $1,000 into $10,000 in a week. The goal is to turn $1,000 into a foundation of mindset, skills, and experience that allows you to scale later. You learn how to manage your emotions under market pressure, control risk with small capital, pick high-quality setups and follow them with discipline, log trades, analyze data, and refine your strategy. Once these skills are solid, small capital stops being a limitation. It becomes a training ground, a laboratory to test strategies, build discipline, and prepare for larger positions in the future. All legends started small, and so will you. A $1,000 account is your first challenge, your first lesson, and your first opportunity to develop long-term thinking, disciplined execution, and survival skills in a brutal market. Those who skip this stage crash fast. Those who embrace it, learning from every small trade and nurturing a long-term mindset, build the foundation for a real trading career. Trading is a journey, not a get-rich game. With $1,000, you learn patience, discipline, proper stop-loss execution, and strategic profit-taking. You turn small capital into a platform for developing your mindset, your skills, and your emotional resilience, assets far more valuable than any early profit. Once the long-term mindset clicks, you stop fearing risk, stop chasing luck, and start focusing on survival, optimization, and preparing for bigger capital later. $1,000 is not a limitation. It's a valuable lesson, a foundation for a durable trading mindset and a long-term career. Patience, discipline, and long-term vision will carry you through every stage, from a small account to major wins in the future. In the world of trading, mindset is your asset and discipline is your weapon. If you're serious about this game, join the Trading Mindset Lab. This is a place for traders who want to survive the long haul, not for those chasing shortcuts. Hit subscribe. Build the mindset first. The money comes after.